US 30 on the 8-hour chart, and the 15,000 is the medium level, and while that is support, then we'll be looking to the upside. Above the 15,000, the next important level is the 15,300, which is the top of minor group 1, the 1, 2 and 3 here. So support on here would see us higher through here. We can expect a reaction through here, the arrival, the reaction, the first high above the level, and then the A, the B and the C correction, and after that then we need to find support. So it is a process when dealing with working through this particular number, especially at this stage here. Just drilling into that quite small here into the 5-minute chart. We've been looking for support on the 15.2, and we can see that it's basically played out as a corrective pattern through here, and support has been maintained. And while it can find support above the top of subgroup 1, 10, 20 and 30, 1, 2, 3, same thing, then we can look higher through here. If the 15.2 20 becomes the retested resistance, then we'll see another leg down here before we see further upside. But I don't think that's the case when I'm looking at the cash market. This is like a little wave 4 correction here, and it seems nearly complete, or it does seem complete, so we can look for further upside from that point there. A little bit more detail on the S&P 500. On the outset, well, you know, both with the Dow and the S&P 500 that the time that's been created for wave 4 here is rather small in compared to wave 2. It's only really half the size in compared to wave 2. So we're just a bit mindful that this particular ABC here may expand into a larger ABC, which would put us over here. This would be the A wave to here, and then this B wave to here. The move up through here for a B wave is normally the 61.8%, but it's moved past that. So we need to look at the 1661 here at the 78.6. So we'll see how that goes there. But, you know, as far as I can see in terms of using the levels, this is pretty well fine, really, because we've got our arrival here and we've got our reaction here. In 3 waves, so I do kind of see it with a bias of pushing further to the upside, but we need to take things in our stride. So we can count this in 5 waves moving up through here. So in drilling down into that a little bit, we've been counting this, as you know, the 1 and the 2, then the 1, 2, 3, 4, 5 for the 3rd wave, viewing this as the 4th wave here, and counting this up for the 5th wave through here, which I think can take us higher through here. If I've got that on account here, yeah, okay, on the 1-hour chart here, we've got from the 1600 here, we want to be, after this 3-wave correction here, we want to be counting 5 waves to the upside, and it does appear that we've got wave 1 to here, which would have 5 little waves in it. Wave 2 pulling back sharp as it should to the 61.8% or thereabouts, so the textbook thing, and then looking up for wave 3 here. So I think this is, when I look at the cash market, this is a correction here, and we should see a high further up through here. You know, as we've been mentioning, finding support on the 1600 really sets the target at the 1650 through here. So I've got that on a smaller chart here. I think yesterday we were looking at this here, this 5-wave structure up through here, so we knew that we were going to get another move up through here as well. So that's still pretty much the same here as well, so we're still expecting it to move higher. It's only if the 1620 becomes the retested resistance that there will be a technical breakdown in the structure of the trend to the upside. But all the same, the 1650 is a line in the sand, and from here on in, you know, we can expect a rough ride through here. So just be mindful of that. The European markets were slightly, I mean, the FTSE was up a good percent, but still sort of lagging a little bit. Just the DAX here. Look, it's testing this for the 3rd time here. So Gann would say the fourth time they normally break through on triple tops. But look, before going long here, and I've been sort of waiting this, we haven't really talked about the DAX for a little while, but we need the DAX to have support on the 8,000 before we can go long. It's just as simple as that, because while it's under the 8,000, which it is now, it can fail and move to the downside. Even if it does move up through here, the breakout is important, but the retest is more important, testing, checking for support, seeing where the demand are, the buy orders, which, as that breaks up through here, the buy orders will creep into 8,000, but will that be enough to hold the supply off through here? So we need that demand and supply battle to play out at the 8,000 there, but we'll start keeping an eye on that now. The FTSE, we've got we're also working across the medium level, the 6,500. Doesn't sort of sound like much, but you can have a look at any stock at $6.50 or 65 cents, and you'll start to get the picture of it. Same with the S&P at 16.50, the same number to me, the 65. So look, this move up through here is in three waves so far. The second part of this was sharper when as a corrective wave. If this was an A, B and a C here, well then the C wave should have been a bit more lazier off to the side here, but it's showing a very stronger impulse structure than the A wave here, so the momentum is to the upside there. Once again though, we would need to see support on the 65 there, so what we can expect is a break higher and then an A and a B and a C across here, then support, then further up on that side there. The Australian market, I just want to have a look at the sectors first. I'll just grab our charting program here. Okay, so this is the daily chart. This is the XMJ, the Australian materials sector. And what I want to point out here is that this particular pattern through here, it's not impulsive. An impulse wave is like this here, where this it doesn't have any overlapping wave structures as such. This is not this top of wave 1 here with this wave 4 here is not overlapped like that. But this structure here is, so this is corrective here. So we can see that there's 5 waves from this point here, 1, 2, 3, 4, 5 down into this section here, but that's not the end of it, because that would just be the bottom of the third wave here. So we've got basically we've got wave 1 to here, wave 2 to here. This is all the third wave here in 5 waves. So this is the fourth wave. Yes, it can pull back to the fourth wave of one lesser degree, which is up here, or the 38.2 retracement level, which is a bit where it is now. So that's sort of fine in a way. Look, wave 4s can get messy and ugly, so that this structure here can get, well, it can turn into a triangle or some sort of double zigzag sort of thing, but it is corrective and it will have a new low down. And of course the 8,000 here, because the extension was in wave 3 here, that means wave 1 and wave 5 will be about the same. So we can really look at the 8,000 here, which is trading level 8 here, but expecting a bumpy ride, through the correction here or down through to here. Commodities are rallying at the moment, so there is support for them, but that will be short-lived. But they can be rallying for another session or two just yet. But just pointing out that the materials sector has still got more downside to it. The XXJ, which is the banking sector, it's a little bit sort of healthier, but as I've been sort of pointing out before, is that we consider this down here, just generally speaking, in 5 waves, and we'd be looking for a counter trend in the norm is the 61.8% of this move to the downside. So we can get further upside here, and of course that would be the medium level there at 6,500, same thing again. So it would be retesting that, and we can see that the commodity market is rallying, and we'll be look at that in a moment. That will be sort of short-lived, but it's enough to pick the Dow Jones, the ASX 200 here finally off the 4,800 here. So, the banks have been very sluggish. So when we have a look at CBA here, this is just a 20-minute chart here, but it's really, it's really spent a lot of time. This is a very sort of well, it's almost corrective pattern because of the overlapping wave structures moving to the upside. So it could certainly not take out that high and move down. So the banks have been sluggish. Of course, the material sector has been sluggish as well, but we can expect a rally for that now. So it's good when you've got the finance sector and the material sector, because that's the market. If they're moving in the same direction, then we can expect the ASX 200 to really stretch its legs. So we can see that the material sector, when we have a look at the commodities in a moment, you'll see that they're rallying for a short term, which is enough to push this up somewhat. But we also need the banks to join in on the party as well. So look, as this is standing and we've been working through this, we're looking at this as the A wave, then the A, the B and the C for the B wave, and we're looking for the C wave to the upside. Now the C wave would normally have some sort of relationship with the A wave here, so we shouldn't expect too much of it. It could just come to this area through here, and I may have this count wrong in here, but looking for this up for 1 and back for 2 here, and looking for 3, 4, 5, but it could be an ending diagonal triangle where wave 3 is smaller than wave 1, and then wave 5 is smaller than wave 3 to suit that. But just drilling in here for a moment. So as you can see, the most of the time we talked about it being spent under the 4,800, but we could see from the pattern that it should, eventually get up there and move along, and it's been doing that. So it's sort of got above that now, and you can see here that it was resistance and now it's support. So it is a positive thing, and we were looking at this here being the A wave, the B wave and the C wave, and hopefully moving higher. Now the other situation here for being positive is the market sitting above 48.30. So that's the top of group 1. So while it's sitting above there, we can move higher towards the 48.50. Depending on what degree of structure that you're trading. Most people trade time frames like 1 minute and 5 minutes and so forth, but you got to be a little bit careful that with the SPY, because it can move on a 5-minute bar and have 100 orders in there, or it can have 1,000 orders in there. So what volumes inside each bar is also really important. So a tick bar set at 40 trades per bar would be more relevant because there's only 30-odd thousand contracts that change hands here, so some of those bars can be quite sort of empty. But anyway, that's another story. But as far as the price is concerned, being above 48.30 is positive. Also, while the 48.20, the pivot, the 2 in group 1 is not the resistance, then it's positive to the upside. And of course, the levels are the 5 and the group 2 up here, the 65, 72 and the 80. So we can expect that to move up based on commodity prices. Alrighty, let's have a look at those commodities. Okay, starting with gold, we're looking at this ABC correction for wave 4 here. The A wave, the B wave coming in, and yes, that looks like the low's in place. So we're looking for a move up that can move up to the 4th wave of 1 lesser degree, which is up here at the 1300. That's a long way off just yet. So we looking at this. What we want to do here is count 5 waves up through here. That's what a C wave is. So that's what we intend to do. And moving up through here with the levels, the 12.30, the 30 is the top of group 1, so support on top of group 1 would see the price at the midpoint, the 50 here. So then there would be a correction at the 50 here, there would be a reaction, there would be, with a reaction, if it was in 3 waves, then it would find support, perhaps at the 40, and then would see a move up higher through there as well. So look, once that's finished up there, then it could come to the equal height here. As I say, there's normally there's an equality between wave A and wave C here. So let's see if wave C is because in a correction, wave A is the sharpest. So let's just see if wave C gets lazy and how far it goes, and we'll just give it enough. We'll start counting the structure within that there. So I've started the count there. So we'll be looking for further upside to come. But there's, we're moving into the supply region, so there's going to be sort of resistance definitely coming into all up here. So just be mindful of sharp corrections in that case there. So the other commodities have been rallying as well. The copper, as I mentioned, is in line with the base metals are in line with the precious metals at the moment. So we're also looking for a bounce off this low down here as well. So the other thing that we had this as the A, the B, and the C here, which so forth. But as I mentioned, I can't remember when over the last few days, that we might have to expand that out because yes, we do know this is corrective, and we do know in due course that this low will be taken out. The question is that this correction that we're looking for here, how far and what shape that it will take. This is it could be just the first leg here. It could be just the first leg if it finds support on the 310 here. Support on the 310, then we would have to look for a little sort of structure to the upside in 5 waves for the C wave, so to speak, being equal or a bit higher or whatever. But finding support on the 310 there, that would be the first step for that, because it could just fail from here and move down, and then that would give us 5 waves down to the downside, and then we'll get 3 waves back and then another 5 down. But I think that it'll find support on the 310, looking at the intraday count here as well. So we've got well, it's just on the 3-minute chart. Just looking, it does appear that we've got 5 waves here off the low, then the A, the B, and the C here for wave 2. Then we've got exactly the same pattern here as we've got over here, just a smaller version, and that's what markets are. They've got their own fingerprint, and they've got half a dozen of their own patterns. But we've got this nice third wave up here, so we're getting the reaction. 1 is the strongest number, so we'll get some sort of reaction across here, then eventually find support, then another ABC. So let's just see if eventually we find support on the 310. Like I mentioned, it should poke itself up there higher after a retracement back into the support region here, and then the first high above the level, and then an A, B, C across here. So positive for the short term, and that's important. That's all we need to know, really. Okay, so oil. Okay, so this is just the weekly chart, so we can have a chat about this while we're here. So what we've been looking for here is we've been looking for this large triangle pattern, and this triangle pattern here, if correct, should move up to, because we're looking for a 5-wave structure up through here as such, and should take us to the 105. Once that's complete there, we should see a larger move down in 3 waves, which would be for the E wave here of this correction here, because triangles are in 5 waves, so the A, the B, the C, the D, and the E here, and then we'd be pushing further to the upside from that point there. Okay, so this, one of the things in here is that we're in this triangle here, but we've also got a triangle in here as well through here. So this is this situation in here. So that's why we're looking for, from the B wave, we're looking for 5 waves up for the C wave here. If that's not the case, then we've got this triangle's already finished then, and if that's the case, then this E wave would go to here, and this B wave would be in here at that place there. And what that would make is we would be looking for 5 waves up from that point. So we'd be looking up for 1, back for 2 here, up for 3 here, back for 4 here, and then up for 5 here. So that's the other option that we can do. Now, for this to play out through here as a larger structure to the upside here, and the triangle already completed at this point here, we would need to stay under the 110 here. So that's our trigger for that point. Following this little 5 waves up as we're doing at the moment would finish just above the 105 area through here, and that's what we're looking for here in terms of the top of wave 3 here, looking for a wave 4 back and a wave 5 to the upside there. We can drill into that a little bit further through here, and it looks a bit like this here. So the 1, the 2, and the nice 3, 5 waves up here as such. And yeah, but so we can put this wave 3 just here and have that complete there. Okay, now that would be the case if this 102 here becomes the retested resistance. Okay, so that means that we could have this here as the A wave, the B wave, and the C wave down here. Okay, so we need to see that. It'll pull back to the wave 4 of 1 lesser degree through here, and then move up from that point there. But if it stays above here, there is a little count in here that we've been counting that doesn't have this quite finished just yet, and it would look like this here. So basically the 1, the 2, the 3, the 4 here, and the 5 up through to here, moving up further. And we can see that this little move here to me is an impulse wave, because we've got 1, 2, 3, 4, 5. So let's just see how this sort of pans out through here, because the other thing too is that I also see this as working across. It's important to stay with the trend, and look for support. Now the support here is the 103, which is the top of group 1, 1, 2 and 3. So a nice support found on here, then the stop would go under the 102. So then you'll be trading up to the 105 at that stage. So taking out this high here at minimum. So that's what we're kind of looking for here. So if this develops nice support here, and you can see that, you could use the 103.30 here as support. All the 3s you can use, depending on how far you want to go into it. All the 3s as developing as support would be the platform that you would go long off. So just keep an eye on that. Yeah, let's have a look at FX. Okay, the euro here, we've been looking for a bounce off the 128, as you know. Didn't quite get there. Obviously there's good support there, and sort of expect that of a nice even number like that. And also 8 as well. What we're looking for here is, we're looking down through here as wave 1 to here, wave 2 to here, and then we're looking at, from wave 2, we're looking in wave 3 to the downside. Now, with wave 3 to the downside, we can see that the market's actually picking up speed to the downside and unfolding the trend to getting bigger and so forth. So it is expanding to the downside. So we've got a couple of counts here. Now, one of the first ones is that from this wave 2 here, we've got nice clean 5 waves down for wave 1 and ABC back for wave 2. And then we're looking for 5 waves down through here. So, it could be this is the low, so it could be counted from that point there. But when you look at the US dollar making an extra high above this one here, so it'd probably be more appropriate to use this here. This 5-wave structure down here, if that's the case, then we'd be looking at from wave 2 down to wave 3, back to wave 4, and wave 4 would pull back to wave 4 of 1 lesser degree, which can be to this point here, or the 38.2 retracement level of that wave 2 to wave 3 here, which is, just in at the 129 here. So that's something that we can be mindful of. I think that we need to take it from this point here, even though technically it can be taken from there. But the thing is that we need to look for, we want to be looking for a 3-wave swing, so to speak, as a wave 4. We want to see it mature. This can just be the first leg here. I can see that it's getting top heavy here, the end of the session, all that sort of stuff. But, well, not just the end of the session, the trend rather. So, yeah, let that mature a little bit, and let's just see how far that goes there. The other thing too is that, as I mentioned yesterday, that a series of, wave 1 to here, wave 2 to here, wave 1 to here of that degree. So this move down here in 5 waves can also be wave 1 here as well. And if that's the case, then we could see a higher retracement level at 61.8 back up into up into this area through here. So we just need to be a bit mindful of that as well, and that's why it's important to allow this rally or this bounce off the 128 mature until it reveals, and confirms what we're looking at here. So just trade the sub levels in the meantime until this gets sorted out. This is also a little bit like the Australian dollar as well. The Australian dollar has been very sort of choppy down the bottom, coming into the medium level here, 90. We're getting a lot of overlapping wave structures, which we are looking at as a ending diagonal triangle. And when you do get an ending diagonal triangle, you tend to get the market to pop up quite strongly. So to the wave 4 of 1 lesser degree, which is up here. So we can, we're still looking for a strong bounce back up to the 95 as a wave 4. So we need to be mindful of that, and that would obviously come from this wave 1 here, this wave 2 here, the extension of wave 3 all the way down. So we are looking for the low here. It's either in place or we've got one more low in place here. It would be confirmed if the market bounced back above the 92 there, then that would help confirm that situation. Like I say, this ending diagonal triangle that we've got here, and I've got it labelled as completed at this point here because this low here is above this one here, and it does count as a 1, 2, 3, 4, and 5. So it counts okay through here, but I just think that we need to be careful. I know that coming into when you're coming down into a group 1, this is how bouncy it can get. So we just need to be a little bit careful. But as you can see, that it's still really in this, this line coming down through here. So we need to be mindful of that. And that's why I mentioned, of course, it could be above this, but a clean break above this, but above the 92 would see the larger, corrective wave 4 rally start in terms of an A, B, and a C for the A wave, and then a B wave, and then a C wave up for the wave 4 there. So we don't know if we've got that just yet, or we're going to be getting another move down into here before we see a climb back up from that point there. So just not quite sure. So just need to tread a little bit lightly at this stage. You can see that this low here is higher than this one here, and that's why we're looking at this being an A wave, a B wave, and a C wave up through here. So in terms of trading this, you would need to be pretty much buying pullbacks at this stage, because I have to say this little move up here, as you can see, is not corrective in any fashion, because it doesn't have overlapping wave structures. Like this low here doesn't overlap the top of this one, and this one doesn't overlap this one. This is very strong here, isn't it? So we can see that it was climbing quite strongly here. We can see that this one here is shorter, so this is obviously a 5th wave in here, so the trend is ending. So we're going to get some type of correction in here. So if we get a 3-wave correction as such, an A and a B and a C coming back down through here, it's good if it does come below the 90, because then if it does come back up through here, then you can start to look at being long and building in a trade from through the group 1, and that's the idea of group 1, isn't it? To build every time it kicks back and find support, develop support, you build into the trade, but you don't build in after the top of group 1 here once you got that last trade on, because you want to get to the midpoint, take a bit of profit, wait to see if that becomes support, and then move in from that point. So of course, if the 91 becomes the retested resistance, and that means that obviously it comes down, it will obviously bounce around a bit, but if it tests that as resistance, then you need to be looking at short from that stage, and also too at the 72 here as well. So if that becomes the retested resistance and then makes a new low, you need to short it at that stage there as well. But just wanted to point out that this move here does appear positive, and we'll be looking for an ABC correction through here to see further upside there. But just be mindful that that's this trend is looking a bit tired up here, and of course if this only came down a small way and then found nice solid support on top of group 1, the 30, then you'd go long from that point there. Alrighty, well that's it. Just to sort of recap a little bit, the main sort of event today would be the CPI figures coming out of China. I'm not sure what time that is, but maybe do some research on that. And I haven't done my research on the CPI figures as well, so I don't know what the bias is on that side. But if I had to take a guess, I can see that the metals commodities are rallying, so that would probably be the indication that they would be positive. Alrighty, well, good morning, good luck, and enjoy the day ahead.